Hello and welcome to Zee Commodity Capsule. Let's start with Brent Crude prices, which have surged on Wednesday morning towards $93 a barrel, hitting its highest level seen last 7 weeks back as supply risk intensified across several major export routes, even beyond the Middle East. Yes, President Donald Trump dismissed the likelihood of imminent talks with Iran while warning of an additional strike coming up and pledging retaliation if Tehran-backed Houthi rebels in Yemen disrupted the shipping route through the Red Sea. Red Sea has become a vital export corridor for Saudi Arabia during the conflict, enabling the kingdom to reroute part of its crude export through pipelines and reduce the reliance on the Strait of Hormuz. Having said so, a Kuwaiti tanker carrying oil products was struck in Hormuz, underscoring the persistent threats to maritime traffic. Traders are now also monitoring a series of attacks on the Caspian Pipeline Consortium terminal along the Russia's Black Sea coast, which is a key export hub for most of Kazakhstan's crude. Having said so, Goldman Sachs says Brent crude could overshoot to $110 to $120 a barrel in 2026 Q4 if Gulf export recovery continues to stall, delaying the production rebound and requiring a large demand response. Gold prices have managed to extend gains on Wednesday, climbing above $41.30 an ounce as escalating tensions in the Middle East underpinned bullion despite a firmer US dollar and higher treasury yields, while investors continue to assess the implication of higher energy prices to the Federal Reserve's interest rate outlook. The attention will be turned towards next week's Federal Reserve policy, where officials are widely expecting the rates to be left unchanged, but the FOMC could reinforce a higher for longer message if energy-driven inflation risks persists. Shanghai and London copper rose towards a 7-week high, although we have seen the prices tracked back by nearly 1% from those highs, but continue to trade in a similar range. For LME copper, it's around $13,800 to $900 a ton. Basically, the strength is driven by the supply worries and firm Chinese demand, which has managed to lift prices on both the major exchanges. Copper inventories have fallen in LME registered warehouses and the Shanghai monitored warehouses too. Chinese demand looks strong and the market is still awaiting the news on potential US tariffs on the refined metal. Having said so, the Yangshan copper premium hit its highest since December 2023 on Tuesday at around $109 a ton. Malaysian palm oil futures opened lower for second straight session on Wednesday, tracking weakness in rival vegetable oils in Dalian and Chicago markets. Oil prices inched higher in early trading on Wednesday as fears of further supply disruptions intensified, giving some support to the vegetable oil prices on Bursa Malaysia exchange. Last but not the least, ICE raw sugar settled flat on Tuesday, closing just below 15 cents a pound, while Arabica coffee closed in red, close to $3.23 per pound. Now, having said so, Citi remains bullish on sugar while they are bearish on coffee. For ICE raw sugar, they have raised the price targets to 17 cents in 3 months and 19 cents for 12 months. They said that the sugar market will have support from increasing ethanol consumption in Brazil and falling sugar production in Europe and India amid the growing risk from El Nino, while in case of Arabica coffee, although that they have raised the price targets to $2.50 a pound for 3 months and $2.25 a pound in 12 months, it said that the supply outlook seemed positive for coffee, particularly with a near record Brazil crop.